Hi everyone, it's Wyatt here from Trilogy's Investor Relations team. As fund managers of property-based investments, it's no secret that at Trilogy we're passionate about property. To give you some insight into why Trilogy chooses property, I recently sat down with our Managing Director, Philip Ryan, to chat about why he picks property over shares.
People have often asked me whether I like property more than what I like shares. In truth, I actually started out in shares when I bought my first share when I was 14, and then I progressed into buying property when I was 24. The point is, I believe property and shares should form part of a balanced portfolio. With shares, you're putting your faith in a number of individuals who are directors of the company who it's likely you've never met, you know little about, and trust them to do the right thing. Property is a little bit different, as it's something which you can touch and feel. You can also improve it, and you can improve it in a number of ways. It could be, for example, by renovating it, it could be by rezoning it, or it could be something as simple as just repainting it. Shares are also relatively commoditised. By that, I mean that each share is the same as another one when it comes to a particular company. Property, though, is different. It's arguable that property may also be commoditised when it comes to units in an apartment complex, but other than that, every property has different features to every other property. Another point I'd like to discuss with you is what's called the efficient market theory. Now, the efficient market theory basically says that all the information which is currently known about a particular company is reflected in its current share price. When it comes to property, it's not quite as efficient as that. Now, obviously through the advent of Google, there's more information now publicly available about properties than what there were in the past. But it's still not quite as efficient as shares. And indeed, I'm a big believer that you make your money when you buy property. And if you attend an auction, for example, where the vendors are under stress and have to sell, it could be simply as an auction on a rainy day and there's not many people there, you can actually find that you can buy property at a much more advantageous price than what would otherwise be the case. When it comes to looking at our view on the current market, I believe we are going through yet another cycle. Some parts of the market are buoyant and others are actually struggling and under pressure. However, if you look at the market overall, there are a lot of economic fundamentals which are quite sound. Unlike other periods of uncertainty, we've got traditionally low unemployment, we've got low interest rates, and we're also being helped by a low Australian dollar, which is obviously improving our export markets and also tourism industries. When it comes to where we see the future, we're always on the lookout for opportunities. We did this in the Trilogy Industrial Property Trust, where we sought an opportunity in central Queensland. And as a result of that, we believe we bought at what would be close to the bottom of the market, and we're in a sector which is going to improve through the low dollar and improved economic situation in that area.
Thanks for tuning in. If you're interested in hearing more from Philip, head over to the Trilogy blog.